Robert, so how do we start this episode?
Well, everybody else is reporting on what happened in April. Why don't we tell them what's happening in May?
On this episode of Real Estate Chat with
John Perez.
and Robert Eid, we're going to be telling you what's happening. It is May 17th, Friday, as we record this. It may come out on the weekend. What's the weekend? Long
So
Victoria.
it's the long weekend again. I was so surprised
Fireworks,
that it was next weekend.
fireworks weekend. Enjoy.
That's it.
And we're going to be looking at mid-May and how things are shaping up, sales, inventory, price, maybe. We'll see. Okay, Robert, sales.
Okay, the 17th of May is the 12th reporting day, and we're going to have 22 reporting days because of the holidays and all this stuff. So we're just about in the middle. Now, I did this a couple of days ago, and it said there was going to be 7,100 and change sales. 2 days before that, it was 68 and change, and this morning it's 68 and change. So I'm not going to bother changing it because in all instances, all those three numbers are 23rd best of the previous 29. So it gives us an indication if we look at that red three-way star, whatever it is, it's less than last year, and it's less than a lot of years, but it's not the worst that we could possibly compare it to. There are six worse ones. So if we've now been watching the real estate market all this year and see that every month it's the 20th or the 22nd or the 23rd, then it's just more of the same. And the only variable is going to be how many listings are there that month. January, there was hardly any, but there are never any. And so we go month by month by month, compare month to month to month, rather than seasonally adjust or any of this other stuff.
Which
So
is
halfway through May, we see that we're not doing as well as last year, but last year was the last month of a false rally that we had in 2023. And now we had a false rally in 2024 for the same interest rate drop anticipation reason. And so now we'll see where we're going next. And you can't feel bad about it. You can't feel good about it. There's not going to be, unless there is a significant change in prices, like 200,000, not going to happen, or 2% in mortgage interest rates. There's not going to be a significant difference in the affordability of houses in the Greater Toronto area. I don't know about the rest of Canada. They can talk about that all they want. But um, most people are concerned is, can I buy? Can I sell? And they have in their mind an objective that they have. Can I achieve my objective of buying? Can I achieve my objective of monthly payments? Can I achieve my objective with the down payment cash that I have? Will I get the money that I wanted out of my house? So I'm going to say that yes, unless you have a condo downtown, unless you have an investment property that you're trying to get rid of on the periphery of 905, you're going to be delighted with what you sell it for because it's like the second highest amount of money that's ever been had for that type of house, as long as it's 416 freehold or 905 fairly in freehold. So I'm going to say, don't worry about it.
Well, don't worry about it until next month because what we've noticed for 2023 and 2022, and also for Real Estate Chat viewers, make sure you click like and subscribe who have been following along with Robert's intricate charts, is that we see a dip. And, I guess the interesting to talk about is first week of June, rate announcement will be made and market will react. And as Robert said, I mean, quarter point, if it doesn't stay to what it is, it will be a quarter point drop, but it's only a perceived difference and there will be perceived confidence in the market. So I guess, using your projections, Robert, 2022, 2023, here we are. And, it's supposed to, if we follow the pattern, it'll dip and that'll be very, very concerning for a lot of maybe sellers who are sitting on the market that need to make a move. But let's say the rates do drop and consumers gain confidence and it's perceived that everything will be okay, should we in theory then see a better June than 2023 than last year?
That's too many ifs. No, no. Number one, there's a seasonal pattern. June's not as peppy as May. May's not as peppy as April. Maybe April's the best. Maybe March is the best. Occasionally May's the best, but it's a season. So, it's the school year. That's why I use the school year, because there's so many people that are keying their moving for the 15th of June to the 15th of August that they sell a few months ahead of that. And so that's why we have a good spring, or a healthy spring, and then we have another fall rally where people move before the snow flies. So we can't think that a quarter of a point is going to instill any kind of uh, extra confidence that isn't there already. If you can afford it, you can afford it. If you can't afford it, quarter point doesn't make any darn difference because of this darn stress test. If you're getting a new mortgage where you're qualifying at 2 points higher, that makes it very difficult. Anyway, so to answer your question, we're going to go into the summer and then we're going to find out. The whole thing we've been monitoring for a while is how many listings are going to come on the market. Is grandma and grandpa finally going to let go of their property that they've owned for 35 or 55 years? So here's inventory. Now, I take what I read off of the Stratus and off of the Realm, and I take not even a percent off it to come up with my estimate. So we're within a spitting distance, 19,876 of 20,000. Now, it's been 20,000 before. And again, we use this chart to say, okay, well, 5-year average, we have 39.94% more. 10-year average, we have 22% more. But 16-year average, we only have 7% more. So what's a normal market? Do we have to take all of the boom and whoosh another 8 years of bad into it in order to get a normal market? It's hard to say. But we still have the ratio. The ratio is 2.89 months of inventory. So that's certainly not excessive. We'd say 4 is sort of the dividing line between buyers and sellers, but that's completely inefficient. It's just looking at a chart, we come up with that number of 4. So this is still, with the number of sales we're seeing around 7,000, not an exorbitant amount of inventory. And we got condo downtown at 416, detached or freehold, let's call it, through the rest of 416. And we got freehold in 905 and then condo in 905. And 905 is very far reaching. So 416 got nothing to worry about. If you've got something that's in rough shape and it's in a lousy location and you just got a tenant out of there and it's in bad shape, well, you maybe can have a tough time selling it and you're going to have to sell it for less than you expect, but everybody else should be fine.
And what is I guess, the guy who asked so many if questions, what if,
Hmm.
let's say we stick with this level of inventory,
Yep.
and of course, we're looking into again what will affect the market and what will get buyers off the fence. So stay tuned
Yep.
for your episode on that as well. Prices, like how will prices be affected into the summer months?
Well, the summer's going to dip 5 or 6%, like it always does, from whatever we got, the maximum price, which was equal to a year ago's in, let's call it March, 1.1, nearly 1.2. So if it dips down, as long as it doesn't break below a million, it's an average. And again, 60% of the average price comes from 905. 905 has many newer houses, but it doesn't have the expensive houses that we have in 416. And the condos that they have are a very smaller, much smaller market share, about 15% of their market, whereas here it's 60% of what happens in the Toronto 416.
Very
So,
interesting. Let's zoom in on his, and I know some of
okay,
our
so we can zoom on this to try and find out, okay, where are we and what should we expect? And that's what we sort of been speculating about. So if we compare to a year ago, I don't know whether you can zoom in on this. The extreme left,
yeah, no, hold
not
on.
really. Okay, well, the extreme left, I've been monitoring it for a while. You can see this is page 76. We're within a stone's throw of the greatest number of active listings in the last 2 years. The total is like 97%. And of the average for the last 2 years, we're like 1.140. And let me look at mine. 143 of the last 6 months average. We're 136 the last 3 months, 130%. And we're the greatest number that we've seen in the last 30 days. So it's what everybody says. There's more listings on the market. The thing is that a bad thing or a good thing? There was a scarcity before. Now the scarcity is filling out. Not in every street, not in every kind, but now you can't say that there's nothing for sale. Now you can say that you have a small selection. And the market won't change until that sales to listing ratio, I'm sorry, not sales to listing ratio, number of months of inventory changes, goes up closer to 4. When it goes over 4, now it's going to be buyer's market. But less than that, it's a seller's market where the seller says, look, there's not 20 of these, there's one of these. You want it or not? I've only been for sale for 4 days. Do you want it or not? And until the number of days in the market goes longer, so a new listing isn't immediately gobbled up, it's going to stay exactly as now.
Which is one of the main misconceptions right now is that some are calling this a buyer's market, but you called it a buyer's market with no.
Well, again, buyer's market is based on sales to new listing ratio of between, some people say 40%, some people 42, 45%. So I've gone to 42.5% and 65%. That if the ratio of sales to new listings falls within the middle, then it's a balanced market. So that does not take into account the new strategy that many, I can't say many enough times, listing registrants are using. If my property doesn't sell in 7 days or 17 days, I terminate the listing and I put it through the system again, relist it, we call it, but it looks as like it's a new listing. So the number of new listings is expanded. So that throws that sales to new listing ratio completely out the window because there's padded by somewhere between 18 and 38%, depending on how you do the math, that are just duplicates, they're do-overs. So that's why we've got to stick with only the number of months of inventory, because that's a snapshot instant. We just had a month. What's the number of sales? We just had a number of 31 days, whatever it is, and how many listings are sitting on the market, and you take that as a ratio.
Well, there you have it. So advice now going into the summer market for sellers and buyers.
Well, the seller has waited this long for a reason. It may be that's more convenient for them, and so it doesn't matter. Again, you have to look around your neighborhood and say, will I get, if there's a gazillion for sale, all of a sudden you say, oh, well, then we're gonna have supply and demand. And that's what it is, supply and demand problem. But if you have something unique, you've got a ravine lot, you've got a completely perfect everything, you've got roof, windows, the guy doesn't have to spend any money. The family coming in doesn't have to spend any money, or they have to paint the one bathroom from pink to purple, whatever they're gonna do. Then you'll get a premium because everybody wants move-in condition. Buyer, you can look around and be prepared to look for something that nobody else wants. I don't say buy on a main street with terrible condition and terrible neighborhood and bad school district. No, I'm not saying that. But you're not losing anything by scrutinizing and taking your time. If you don't buy until December, if you don't buy until September, you will know much better what you're doing by that. Interest rates will come down a point over the course of the next 18 months. Is that a significant difference? They may change policy. They may change policy on what do they allow for down payment, for amortization, and this initially good stress test, which I haven't been in favor of in a long time. But that's really the killer for a first-time buyer. So what's
Okay.
the advice? The advice is be patient, and you won't sell in 2 days, but maybe you'll sell in 4 weeks. Is that so bad?
So time is the answer. The longer, I guess, in this situation, the more you know, and the longer the time that it takes, don't jump into the market without knowing and without listening to advice of real estate chat, our community, your real estate professionals. Make sure you're consulting with everybody who knows about real estate. Thanks for watching this episode of Real Estate Chat. If you have any questions about where the market is headed, make sure you continue watching our episodes and put into the comments what you think. Stay tuned for the next one. Take care and bye for now.
Excellent. See you. Bye-bye.